ahead of schedule. What I will also do, and we still have a speaker yet to join us. I think we are still awaiting Ramos to join. But what we will do is, given that appropriateness of the panel here and the depth of material required, and I can tell you the previous sessions had a lot of questions there. I think I was shocked at the number of questions coming up. I think this topic is not typically well researched, or generally people don't ask too much. It's too much about unsecured and maybe even PL and even deposits and all. So a lot of other things happen out there. What we will focus right now is on secured lending and primarily on the MSME and retail side. This intent of this session is largely to focus on this, not to go into anything on corporate, because that segment is well dealt differently, and we will focus on that at a separate point of time. I think my sincere thanks to all the speakers to join for joining us ahead of time. Thank you guys. Thank you Ramas. Thank you Raghav. Thank you
Thank
Suyash,
you.
Mudit, and Sujay. Thank you all of you. As I said, we are starting ahead of time, and generally in the market, on the lab side or a commercial vehicle side, or even farm loans, I agree, we found it a bit difficult to sort of manage the digitization process and customer engagement and journeys. The cost of doing transactions, I think yesterday when I said that the cost of doing one transaction, which is CAC, is as high as 50 to 25,000 for a lab. I think that's what is what I saw more in market. So Raghav, if your numbers are less, you're doing good, absolutely great there. But generally, that's the price which people have to pay. Generally, also from a TAT perspective, journey perspective, people don't know much. Engagement layers are also a bit depleted. The channels also don't function for these acquisition at all. I think it's surprising that channels don't work. It's all physical touch and DSAs. So I think at this point of time, maybe I'll start the session with and my request to all panelists is, what you can do is maybe introduce a bit about you and your company, what you are doing around secured lending, and also your first perspective on what is going to happen in this market before we go into deeper questions. So with this, I'll maybe start with Ramos first. Ramos, over to you first, and then I don't know which way we'll work. I can see a very different structure, so I don't know where to start. So Ramos, over to you first.
Yeah, thank you, Samir. First and foremost, thank you so much to you, to Digital Fifth, and to all the participants, and of course my fellow panelists. Really feels good to be here. Thank you for giving me the opportunity. Just a quick introduction. My name is Ramaswamy Subramanian. I'm called Ramas. I'm the Chief Product Officer with Karnataka Bank. I come with around overall 29 years of experience across BFSI. I've done multiple stints in multiple organizations in areas ranging across assets, liabilities, insurance, broking, microfinance, consumer loyalty, and so on, right? And yeah, I think, of course, being part of Karnataka Bank as a chief product officer, of course, one of my areas of remit, one of my areas that I'm looking at, of course, is the lending side, at the asset side of the balance sheet. Karnataka Bank today has almost 75,000 crores of assets, right? And a large part of it is MSME, right? And traditionally, the bank is a 100-year-old bank, and we have been always pretty strong in the MSME space. And that's one area which the bank also, wants to grow. So from that perspective, when of course Samir was kind of reaching out on this particular topic, I was more than happy to kind of join in and speak about it. So secured lending in MSMEs is definitely an area of interest. That space is evolving. There are a lot of challenges, and I'm sure we'll speak about it as we go along during the session. But yeah, I think it is something that is a subject close to heart, and I'm happy to be here. Thanks, Samir.
Thank you, Ramas. Over to you, Raghav.
Hey everyone, myself Raghav Aggarwal. I'm working as Chief Risk Officer with the Small Finance Bank. So as the name tells, we are a small finance bank operating out of Punjab, and gradually we are expanding to other states and districts also. So we are primarily into the secured lending space only, historically since inception. So this, as Ramasji was saying, that this topic is close to his heart. Same is the position with me, since we are in this secure lending space. So currently I'm in the risk part, but I have worked in the underwriting teams also. So I feel I would be able to do justice to this topic of the session. So looking forward to this session to have a good discussion.
Thank you, Raghav. Sujay, I think you sit on both sides. One on the sort of tech side of the business, right? Fintech side of it, and of course you run a large portfolio, so it'll be good for us to understand your perspective.
Hi, good afternoon all. My name is Sujay Prakash. I am the business head with Northern Arc Capital for the MSME retail as well as loan against property. At Northern Arc, we have enabled and serviced thousands of MSMEs and small enterprises, okay, over the years. In my personal career, I have spent close to 2.5 decades largely on the secured MSME lending side. So my entire career is built around this space. So I worked in large banks like Citibank and ICICI Bank. And now 2.5 years I've spent with Northern Arc Capital here.
Thank you. Thank you, sir. And maybe first perspective on this topic itself, just quick first pointer on what you see in the market and what maybe Northern Arc is doing.
Yeah. So as Samir, you rightly pointed out about CAC, which is cost of customer acquisition. Of course, see, the MSME secured market is very large across the banks and NBFC, right? The LAP market itself, if you look at those bureau data, is close to 12 lakh crore rupees. And the LAP market with NBFCs itself is close to 2 lakh crore rupees. But there are a lot of changes or a lot of good strategic initiatives which are going to happen in this industry per se. Okay, where we'll be aligning to reach the small enterprise lending much better. We'll be able to reach the customers who are further away from the banking centers better, and we are looking forward to the changes or the strategic improvements which will enable us finance a smallest ticket of loan in the quickest possible time at the lowest possible cost. So we'll speak on, we'll try to dwell on some of these ideas.
No, thank you, Sujay. Suyash, over to you. I think you are working on the tech side for so many entities. So what's your perspective first thing on secure lending?
So just to give my background before, so I work at IDfy. IDfy, before this I was working at Capital One, which is a bank based in US, primarily working on preventing credit card retail fraud and also underwriting models for commercial lending and small business banking as well. So part of my experience comes from the practices that we had outside of India as well. But at IDfy, our mission is to essentially eliminate fraud and establish trust. And a lot of our solutions revolve around how do we help equip the fintech and the banking NBFC ecosystem get better customers, get better risk assessment, and prevent fraud. And that's the underlying architecture for every single product we build. And that's part of a lot of fraud is essentially for us two-part problem. One is at the onboarding stage, how do we create robust assessment tools that allow for entities to onboard people with a lot more confidence? And second, if the no process is foolproof. So making sure that if there is a wrong person flagged, we flag the higher risk profiles also for enhanced diligence and also perform regular due diligence post onboarding as well. So that's the focus area for IDfy. And I'll talk as the webinar goes along, I'll talk more about some specific solutions that we have seen which have worked very well in this space.
Thank you, Suyash. And over to you, Mudit. You run a platform which has now become very famous for how you run the LOS, LMS components of it, right? I think a lot of people actually are using it. So maybe your perspective on how your platforms are able to support the secure lending products as well of the ecosystem. You are on mute.
Thank you, Samir, for inviting. So at Synoriq, we are building a new age core lending system. And of the 45 customers that we have, around 80% of that is into the MSME business loans. So in MSME business loans, we see that this market is growing at a very fast pace. The primary driver, I think, is the high return on asset. So if you look at the micro lab category, so look at the listed companies like say 5 stars. So their return on asset is upwards of 7%. and their NIM is more than 16%. So this allows for a high rate onward lending, and NBFCs which are smaller or mid-size, they can make a good business out in this MSME business loans, and both on the commercial vehicle financing side and as well as on the mortgage side.
Okay, perfect. I think sometimes those returns are so shockingly high that आपकी जान निकल जाती है. Why we were getting into that's where the money was, right?
But what I see that market is like expanding. It's so many NBFCs are opening up, and small lenders are taking a step forward to kind of expand their capacity. Ex-bankers are jumping into this space, and I think market demand is huge. It's consistently giving good business to so many lenders.
No, are you asking somebody here to jump and start their own companies now? What are you saying? That's a joke. So Rama, so what do you? So maybe I want to get your perspective that this is such a large market, and with good rates and all of that, still not enough work has happened there. Very large banks may still not be going deep into this segment. So I want to know what are the challenges in the market? Why it is so tough to enter and service the customers here for the banks?
Yeah, sure. So as somebody was mentioning on the panel just a few minutes back, Samir, MSME is absolutely broad, right? I mean, the definition of MSME itself it ranges right from a micro enterprise which is less than 5 crore turnover as per RBI, going right up to 250 crores, right? So it's a very, very wide spectrum, and the opportunity is huge. But also, the right to win from bank perspective, right, is something that the bank will need to look at, right? Because there is, while there is, there are the fintechs and there are the NBFCs which are more nimble and are able to originate better, are able to underwrite better at the customer's end. From a bank perspective, especially a traditional kind of a bank like Karnataka Bank, which is now looking to transform itself, obviously there are several areas that we will need to look at, right? Especially if we have to come down from the medium to the small and then to the micro, right? We have been playing the small and medium space for 100 years now. As I said, almost 25,000 crores of our book out of the 75,000 is in that space. So that space is something that we understand, but a lot needs to be done in that space further to improve our processes, to improve our turnaround times, to be able to assess the security better, and collaborate better with some of the fintechs and the other banks which are there, and the NBFCs especially which are there. So that's one part of the challenge. On the other side, you have the micro side, right? And that's a space which obviously not many banks really play in, right? Especially I'm not talking about the small finance bank category, which my friend represents here, but at least the larger banks typically are not very aggressive on the micro side, right? And that is where one of our challenges. Sorry.
I think.
Yeah, so sorry. Yeah, so that is one of the challenges that we face, right? On how to originate, how to understand this customer better, right? How to underwrite this customer, because we know that the challenges in this space, from an MSME perspective, if I were to talk of course, the credit history is sketched. It's not a strong, they don't have access to formal credit, so therefore you won't see a strong track in that sense. You may not see a strong track, right? Two is in terms of strong financials, right? A bank like ours has traditionally been used to looking at incomes, profit and loss, balance sheets, and all of those things, right? And then arriving at limits. But in this space, again, we know that for a fact that getting strong financial statements is going to be a challenge, right? So how do we tackle that problem? Then the larger problem, which is specific to the secured lending, is the lack of collateral, or the inadequate quality of the collateral, if I were to call it that, right? So as a bank, we want prime property, we want everything clean, 30 years of track, chain of agreements, all of those things, right? It doesn't happen, right? The world has moved on. So we have to find ways to be able to accept security which is not strong, while we look at the credit of a borrower which is strong, right? So that mindset change has to happen. Today, the bank, at least in the past, the bank has been more happy with strong collateral, but on the credit worthiness of the customer, we are okay, right? To be, to have some deficiency, because the comfort is that was collateral strong, right? But that is not the way the world is moving today, right? I mean, at least in this segment, if you want to make a real deep penetration, the mindset shift is required, and that's one of the things that we are trying to build about over the last few years now, and of course, going forward, Samir.
No, thank you. Thank you. I think this is good. This is good. So Raghav, you used a word called you were also underwriting some point in time, and Ramas actually spoke about the challenges there as well, and also dependency on collateral, which may deplete with time, right? As the quality also sometimes goes down as we go down the value chain. So maybe Raghav, maybe you want to give us your guidance on how these kind of frameworks can be actually built, because we are running risks, right? So how the banks can actually manage risks like this, both on the underwriting as well as on the quality side as well. So over to you.
Samit, when we talk of MSME credit, so it is not a one-time, just a one-time tap relationship with you have onboarded the client and you left him free that he'll automatically repay you and it's going to eventually, the loan is going to scare off, then the relation gets vanished. So MSME is I would say that it is a long-term relationship with the client because as the MSME grows, so does the financial institution grows. So we have to, ensure that they are getting on-time credit whenever it's required. Plus, from the risk perspective also, the bank needs to continuously keep a watch on the client, whether from end use perspective, from maybe from the fraudulent perspective, so that the money is in safe hands. So it is a continuous tracking activity for particularly the MSME loans. And so it becomes equally important that we keep a watch on the collateral also. Once we are talking of secure lending, so it becomes important that we keep a watch on the security which is being mortgaged with the bank. So more particularly in case of collateral, the immovable properties. So that is very important that we track the records, we track the ownership, we track the mortgage, what typically we say the mutations in the favor of bank or the financial institution. So that is very important. So considering the number of borrowers or the number of securities held with any of the banks or institutions, so it becomes practically very difficult or next to impossible to have a track on manual basis. So that enhances the need for digitalization, for automation in these very areas. So that is where we want to tap on. That is where we want that to be digitized. It should be automated, and the credit to MSME can be made more effective and more even we can say that it can be made more affordable for this segment.
I think
That is
finally MSMEs pay for the price, right? All the high NIMs and all are paid by somebody, right? So I think this is a good idea. Do you see which area do you see is the best possible ability to reduce the TAT and all, right? So what do you see the normal TAT and where should it go from here?
I believe that the typical TAT in any, even in the smallest of MSME tickets, should range from 8 to 10 days, considering the the number of checks you have to take on the collateral, the number of checks you have to take on the borrower itself. So it ranges from 8 to 10 days typically. So there is a great need to reduce the stat, very quickly. So this reduction isn't possible if we don't check out the problematic areas. Now the problematic areas, the most common area is the revenue record for a collateral. This is one record which is it's not available handily with any of the legal counsels or with any of the banks. Yes, today we have digitized FUDs, what we call it. But that is not the only proof which we are going to take. There are as many as 5 to 6 documents which you need to collect for any single security. So, and in an MSME case, that can range from 2 to 3 securities for a particular case, depending upon the ticket size, of course. So this stat can be easily reduced if the government jumps in, they create a digital atmosphere for this. So this can be very easily tackled, and we should be able to reduce the stat to around 5 days very easily. 4 to 5 days can be easily managed. So even whenever we talk of inclusion perspective for the MSME sector, so banks or financial institutions, they are all trying very hard to provide as much as coverage to this sector. But once we go for the secure lending, so I don't find any completely digital lending product available in the market for the secure lending products. So it has to be a digital only. There will be only and only a mix of physical as well as digital mode. So once we are able to go for a complete digital product, so I feel that the coverage will be immense. Even we have been searching for some self-sustained journeys for the online lending, but this is not feasible so long as it is on a physical mode. So this digitalization can bring in many drastic changes.
No, this is good. This is good. So, I think, and to all of you who are in the session, please keep raising your questions. I've seen some of these questions coming up. We'll pick it up. Also, as we proceed, you can raise your hands and we will pick those questions as well, because these are all practical problems you are facing right now, and you would want to hear from the experts rather than just sort of figure out how to do it. So I think we'll be happy to pick it up. Just because I'll come to your question in a minute, maybe you can document it and I'll pick it up from there once we know the question as well. So Sujay, from your perspective, I think we spoke about pointers like risk assessment and others, and also there is also a chance of fraud. I think there's also a question here is that what are the critical factors you consider while assessing the fraud risk profile of the SME and MSME? So maybe on the risk side, since we are talking a bit more, so you want to sort of take your perspective on how people should actually go around assessing the customer on the risk and fraud both sides. You're on mute. You are still on mute.
You're
Yes.
Yeah. Hey, hi. I'll focus on the basic thoughts all of us have, and then to basically get the thought flow correct, I'll compare secured MSME lending to unsecured one, right? So essentially, the income estimation, the KYC checks, etc., are common. Those are the common checks there. So not going to the fraud related to those customer selection or the KYC, etc. Let me speak first on the property related issues and frauds, etc., and what all can go wrong. Okay. See, when you lend secured, and when I'm saying MSME secured, I largely mean by secured against property. Okay. Of course, there are verifications required, which is like a valuation of the property, valuation assessment, the legal title flow assessment, etc. Those are the basic process all of us do, all the banks and BFCs, everybody do there. These are the ones which actually take most of the time in terms of that, and where my other panel members spoke on that. They are, when they think of reducing TAT, etc., the most of the focus goes on that, these parameters. Now, what can improve here in terms of both process efficiency as well as fraud reduction? Okay, in my opinion, I want to point out a few items. Okay, number one, the registration of the property records has improved significantly. I mean, some of us here are the old-time lenders. We remember that 2010, I think, was the first time Tamil Nadu introduced MOD registration. And as we see here, even AP Telangana has made it mandatory, if I'm not wrong, by 2021-22 and all. So now most of the states have a registration at least, which is either mandatory or the lenders themselves have made sure that the registration of charge, etc., is done mandatorily for the loans which they give. So that's a positive. So record keeping has improved there. with respect to the simplification of the process also, like Government of Tamil Nadu and MP, I think, have come together. And I'm quoting this PTPFC, which is Public Tech Platform for Frictionless Credit, where the search of these charges as well as charge creation for a very small amount up to 1 lakh at least will be possible sitting on the desk without going through the traditional document writer at the SRO. So the charge creation improvement, the search running or in the encumbrance check, etc., if it gets more digitalized, that will significantly reduce the fraud, which is linked to a property document or the charges created on the property document. Okay, so I see the environment actually getting a little positive compared to what it was even a decade back there. So now coming to verifications. With respect to verifications, all of us NBFCs and banks have done their own bit. So we have done our either external or internal valuation or appraisal setups, etc. And we have a lot of expertise right now. Okay. Our expertise allows us to be fast on that. Like putting Northern Arc, we have a fully digital own in-house valuation app, which are impaneled valuers across India can use it, and whatever they submit, not only their standard reports, but small nuances like geotags, time taken to value the property, what all he did there in the site, those information can flow in there. Okay. So a lot of work being done by lot many players here. Maybe a little bit of info sharing or maybe a little bit of a standardization here can across institution can make this process better, more cost efficient and more replicable there. That was with respect to verification. One last item which I want to quote is that, see, when you're lending money secured MSME loan, when you're giving to the borrower, you are looking collateral as something as a way out or as a deterrent, right? And in the first case, it is the loss given default, which is important. And second case, it is that whether it is a self-occupied residential property or not, that decides how much deterrent the collateral is. Now, basically, depending on which scale or which position the collateral lies, the collateral has importance, right? So today, maybe a collateral in a certain place has more liquidity if you want to purchase and sell off, and maybe certain collateral has more value because which customer will not default, right? So all of us are trying to put up internal scores, etc., and to assess how to place each of the collateral, and maybe then look at a standard scorecard or a digital criteria to approve or assess the loans in a more standard manner. Okay, so there also, Samira, in my opinion, lot of kind of joint work can be done with the institution, which will ensure that the whole process gets institutionalized, gets standardized, and both in terms of value of collateral, how we assess, both in terms of liquidity tomorrow, and what I said earlier about record keeping, etc. The systems can improve, and these improved systems will lead to lesser fraud, Samir.
No, this is great. This is great. I think long and detailed, right? I think somebody was writing. I think they would have got some ideas of building it up. So maybe, Suyash, from your perspective, given that you work with so many entities in this journeys, do you see any innovation which is happening, any changes which are happening to solve any or many of these issues? Up to you to figure out any or many, because there are enough out there to solve for.
No, I think there are lots of challenges you highlighted, right, around TAT, around overall charging cost and all of that. I think what we focus on is around essentially around fraud, and what we see is fraud is also one of the reasons why actually some of these issues play out, and because the underlying KYC requirement and robust checks requirement, why it takes so long is because we are not sure of the person we're lending to, or because the risk profile or risk assessment for these become harder than they need to be. Couple of ways we have identified, like if I have to highlight top 3 kinds of frauds we have seen that we have caught. One is around false invoices, where we have seen a bunch of false invoices get uploaded at the time of underwriting process itself, and especially more prevalent for small companies where revenue is sub 5 crore that opt for supply chain financing, and essentially companies take out loans against invoices that have future payment dates, and the buyer then pays the lender to clear the loan. Fraud is done by essentially creating false invoices that will never get cleared. And what we did was we looked for at least players who were uploading e-invoices, and we were able to check for the e-invoice. Can we access the GST database and verify the QR code on these e-invoices? So that helped mitigate part of the problem. Part of the problem where there was not an e-invoice is a much harder problem to solve. Second is diversion of funds, where we have seen a lot of challenges around legitimate parent companies take out loans in their name and then transfer these funds to shell corporations against fake supply or service. We have seen parent company also give bad collateral to lenders, limiting the capacity to recover the loan through asset liquidation. And what we do is we essentially try to use shell check API. We have MCA, employment record, loan history combined, and we have built an API which essentially determines whether the company is a shell company or not. And that's a real-time check that we built out to assess whether the shell company plays out a role in whether the company itself is a shell company or it has transactions with shell companies or not. And third, we have seen is round tripping, where money is rotated between companies owned by family members, and brother's company could buy a product from a person's company, then sell the same product to the father's company, and this shows multiple transactions and profit for the same product without the money ever leaving the family. And there are multiple advanced APIs, GST advanced API, to identify ownership of companies, for example, see related party transactions through ownership level iterative search. And also, we can use PAN related advanced APIs to identify original registered addresses and see if those match for multiple players. So these are the kinds of things we have seen. And what we feel is we can build these on one of the things Raghav sir addressed was there's a lot of physical process current involved, and digitization will make a difference. I think what digitization also does is it allows for a lot of these kinds of frauds to be detected real time, because this information now is available real time. So it allows for digital to not just be faster, but also be a lot more robust against both fraud and risk.
No, excellent. Excellent. This is good. This is good. Mudit, from your perspective, since you are building stacks and journeys for a lot of people, and they find it tough, right? You clearly see that demand is very high and supply is not as good, or maybe can get better with time, right? So what are things which you have seen in the market happening, and what is your prescription on solving these problems? Because they can actually add hundreds and hundreds of crores to the top line and bottom line of the banks, right? If they can solve this most critical problem, I guess, at this point of time.
On the fraud side, so as a platform for onboarding, we integrate with these API providers to kind of help the lenders to do the fraud checks at multiple levels, maybe at the customer level, maybe at the collateral level, and at the identification level, at the bank statement level. So these fraud checks definitely are helping customers, and frauds are very frequent, I would say, in the market. So when customers kind of subscribe to our platform, take our platform, so one of the advantage they get is that they have the ability to detect the frauds early on. And this is one of the reasons why people are looking for technology upgradation. Now, coming to the collateral side, on the collateral side, there's emergence of platforms which will have aggregate valuers, but I don't know the maturity so far. So the most practically what is working is giving say a login access to the valuers, where valuers will come and upload their reports. The legal agencies will upload their reports. Along with that, they will fill in some additional data points. Now, even that is helpful for the lenders, because now they get the GPS coordinates entered into the system. They get valuation entered into the system by the vendor itself. And on the process side, there are automations like based on the certain loan amount, you can say trigger the request to one valuer, multiple valuers, and then you can do a kind of fraud detection based on say past data of valuation in the similar pin codes. So those kind of intelligence over the time can be built in. And on the and also, like from a size of the lender perspective, there are different kind of problems which each of these lenders are trying to solve through technology. So focusing on mid-sized lender, I think what these technologies are helping them is to compete with large lenders, at least in terms of the faster processing, better fraud detection, and better kind of faster valuation. These things. Yeah.
Thank you. Thank you. Ramas, Prema has asked the question जिसका मेरे को हवा में नहीं है. Okay. So this question is saying that earlier only collecting property documents was seen as a market practice. Regulator has made some changes to this practice. Can you elaborate on new practice and how can where do you start? If you have no idea, that's also okay. I'll proceed.
I can say from a bank perspective that practice of taking documents and keeping just like literally a money lender, substitution of a money lender kind of an arrangement is obviously not something that RBI would really appreciate. So we don't do that, right? You would need to register the document. It could be an equitable mortgage, it could be a registered mortgage, depending on the state, depending on the kind of market that you're servicing. Even if it is a equitable mortgage, then at least the notice of intimation has to be registered so that at least you know that there is a charge created and on the SRO, and there is tomorrow there's any other property which is the same property is being kind of mortgaged, and at least you know that you can prevent the chance of fraud. So taking the document and keeping and giving a loan is a very risky practice. Obviously, that's not something that anybody would like to do, because then tomorrow if the same property gets there are so many practices that people spoke about the fraud, right? So, you get a duplicate document created, and then you kind of register that, and then a charge is created on that. Then you lose the right on the property, right? Tomorrow, the one who's registered will have a right over the property, even though you may have given the loan before the other party. So from that perspective, I don't think that kind of practice, at least from the bank's perspective, will work. I know there are, at least I understand that there are a few NBFCs who still do this kind of practice, but definitely not on the banking side. Number one. Number two, just to react on the TAT, and my colleagues on the panel spoke about TAT. Yes. So if you see the life cycle of the loan, Samir, right? Practically every area has been digitized today, right? Right from the application onboarding, the underwriting of the borrower, and on the other end, the disbursement, the e-signing of documents and disbursement, and all of that has been digitized. Obviously, where the crux from a secure lending perspective is the legal and the valuation, right? Which is where I think my fellow panelists also spoke about the challenges, the fact that it is still digital, many places are still physical, right? And that is one area obviously we are also trying to solve for. And there are so many players in the market today who are offering services to at least partially digitize this, right? So while so we are working with a couple of them. If I could name, there is players like Matrum, there are players like Velocity who help us to do a lot of this digitization, right? So at least some part of it can be digitized, where we are able to send the records through a digital pipe to these players, where they are able to actually, through multiple websites, they are able to kind of download government websites. I'm talking about, they are able to scrape and they're able to download revenue records. They're able to download the income certificate. They're able to establish a chain. All of those things are being done, right? Even on the valuation side, Mudit spoke about GPS coordinates, right? So you're able to actually track. You're able to get a clear, straight digital record of the previous transactions which happened in that vicinity, similar properties, what kind of values they went for, and therefore you can use all of that to arrive at some kind of a valuation for the property. So all of those are areas that are available today in the market, and all of those are areas that we are also seriously exploring. We have done one or two types already, and we're doing more. The idea being, of course, to obviously reduce the TAT and give a better experience to the customer, while obviously not compromising very seriously on our internal risks and policies. And there are ways to ring fence this from a risk perspective also. You could always decide what kind of locations, what kind of properties, what kind of borrowers and what kind of loan limits you're willing to start with, for this kind of arrangement. Whereas if it is, of a profile which doesn't meet this ring fence, then you still go through the normal physical process, which gives you more comfort. So there are ways to ring fence the risk and try and do this. So the idea should be that I think we do need to embrace these kind of changes, and as I earlier pointed out, a lot of it is also got to do with the mindset and the risk appetite that the organization is willing to take. Yeah.
No, this is good. This is good. Thanks, Ramas. In fact, if anybody has any question, please go ahead and raise your hand. We will pick it up right away. Or if you have a question, you can ask those questions, and we can sort of proceed. Yeah. So let's continue. I think nobody from Digital Fifth can ask questions. Okay, let us put that control there, right? Otherwise, he'll.
Actually, I have a question, Samir. So,
Okay.
Ramas, you said about registered documentation and all that, right? At the time of mortgage or at a lab. How do you simplify the process of when the loan closure is happening? I mean, I've recently done it, and that's an experience out of it. Otherwise, I wouldn't have raised. Samir knows me. I never asked a question. But this is a really bad experience, and especially somebody is doing remote.
Yeah.
How can we simplify that? I mean, anybody from the banking fraternity or NBFC fraternity?
I think banks, or sorry, most institutions want to make the loan closure process more difficult because they don't want the loan to go out, right? I mean, typically I'm saying this, right? And I know, understand that obviously we need to simplify that process, but there is some bit of friction which is also desirable, being selfish here, to guard against the property going out, right? So a lot of banks use this as a strategy today to delay it and then make a counter offer to the customer and retain the customer, rather than very easily have the property documents available and give it off and let the customer go. So while having said that, I agree with you. Obviously, we need to still simplify the experience and make it such that the customer is able to kind of. So I know of an institution, for example, and I won't take the name here. They actually have a NPS, Net Promoter Score, linked to closure of the loan account, the experience that they give to a customer, right? So there are organizations which are looking at it from that perspective. But overall, I think if you ask the CFO, and there is no CFO on the panel here, he will say, boss, मत छोड़ो इसको.
Nice.
Got it. Thanks.
No, see, I'll add up here. The SRO or the sub-registrar office level, the charge creation as well as the charge removal, I think which is the pain point you are highlighting here. Okay, that is, of course, physical, right? So for both the process, somebody has to go there. Okay. What changes have happened which possibly will help the customer and specifically the smaller customers? What changes are on the pipeline? One is that Tamil Nadu government's circular, we said that incremental top-up loans, we will not need a MOD registration incrementally. So that will shorten the process. Second is that, which I was quoting that PTPFC, which is that RBI Innovation Hub initiative, where some charge creation can happen now online digitally by the lenders directly. So that will shorten the process. Charge removal, of course, requires level of delegation. Not everybody in the organization can sign up the charge removals, etc. And of course, we will look forward to the more government initiatives to come in. Once the charge creation gets digitized, the charge removal possibly also will get digitized in the due course. So that is the future-looking answer I have.
That's good. That's good. Maybe before we conclude, maybe quick pointers from maybe Raghav from your perspective on what innovations you are expecting in the market, what changes do you think will happen in the market? Just quick, 1 or 2 minutes from your perspective.
I mean, like pain points we are talking of since we started. So, one of the innovations or the very good step was the SIRSAI, wherein for the bank's perspective, you could come to know about any of the charges against any of the collaterals which you are prospectively looking into. But still, there are some inherent challenges about that also, considering that there are no unified codes for any of the collaterals or the properties in the market. So these are differently spelled out. These are differently, the numbers are different. So the way you write them, that completely changes the game. That whether you will be able to get accurate results for that or not, that remains a challenge. So so this is one area which we should be looking into. The government politically may be looking into the various laws from their own points, but this is one reform which I would say that there should be, that all the uh, immovable properties should be brought into a uniform code so that they can be assigned a unique ID. Similarly, there are some recent very good solutions in the market. I have come across a very recent solution that I feel of a very good value to secured lenders, wherein that will provide a real-time check on all the collaterals any institution is having. So we can have a history maintained, and we can get on the tap check on any number of collaterals, and that will provide us the complete title chain. That will also provide the recent status, any change in the history, any change in the title, and we even communicated to the lender as in form of trigger. So that I found of very good use for us secured lenders. So these reforms I feel should be there, and more players should be there in the market to bring in more inclusion for this aspect. So that's my take on this.
Yeah, any other perspective, anything else, what should happen in the market before we conclude? Mudit?
One thing would like to highlight. So we have talked about the problem of TAT. Now, what we realize working with our customers, the TAT, the legal and technical are not the most TAT consuming step. They usually get completed within 2 days. The TAT is usually taken in the query management, which is basically, yeah, there are certain documents. Now you have your ops team has certain observation on the document. There'll be some to and fro happening, and this consumes the maximum time. So what we realize that the legal technical part takes us 2 days, but the whole disbursement is still taking 25 days. Why? So we proactively try to address this in our platform, and I think this is basic innovation, not a very kind of fancy AI ML innovation, but this basic innovation helped our lenders to reduce that to nearly 7 days. Because this all query management and the scan based document where parallelly multiple people can review those documents and give their observation in one go. So this parallel kind of working of multiple approvers, for example, legal, technical, credit, ops, everyone working together on the one file on a scan based documents and giving their observation in one go, and the sales guy or the RM resolving it in one go, or the credit manager resolving it in one go. This helped in increasing their TAT performance significantly.
Good, that's good. Any other perspective now? If no, we close now. I think thank you. I think to be very honest, this area is rather unexplored. And once we look at this unsecured lending, whatever automation has happened and what has happened looks like a easy one to crack. I think industry took 5 to 6 years to reach the level of maturity there. I think that will take maybe in this segment, given the complexity, it may take maybe another 7 to 10 years to reach the level of maybe the ease of life, which is possible. But I don't think it'll remain, it'll be fully physical, fully digital. It'll still need a digital angle to it, the way the products are and the way the amount is still there, right? You will still want to do it. But thank you to this fellow panelist, and thank you to the entire participants who have joined here. I think it's a tough subject to talk about, and we spent last 3 hours going through it. And I think my team has been preparing for it, saying that what should we do and what not to do. So thank you to everyone, and thank you to my team for making it happen. Thank you, guys. Thank you.
Thank you, Samir. Thank you, Digital Fifth.
Thank you.
Bye-bye.
Thank you.
Bye.
Bye.
Bye.